Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 351 on November the 29th, 2024. I'm your host, Eric. And as you guys can already tell, I have my voice back. Last week, my voice sounded awful, but I still wanted to record a show. This week, I am doing a much better job, and so hopefully it's a little easier to listen to. But thank you guys for listening nonetheless. In this week's show, we're going to cover the trades from last week on Riot Labs Inc, Barrick Gold Corporation, and Macy's. And we discuss three new trades on the Advisor Shares Trust Pure U.S. Cannabis ETF, the Bank of America, and American Airlines. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC at theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. Now, the stock market finished this holiday week a bit higher for the second week in a row. The Dow Jones Industrial Average grew 614 points, ending the week at 44,910 points. The S&P 500 index gained 63 points, ending the week at 6,032 points. And now it's time for the topic of the week. Topic of the week is pattern recognition. There are two main skills that I use to make money trading options. The first one is my knowledge of option trading strategies and their risk characteristics. The second skill, of course, is pattern recognition. As I was thinking about this topic, I realized, or at least acknowledged, just how important pattern recognition is in life. We often use pattern recognition while driving in order to adjust our speed or avoid a driver who is being reckless. We use pattern recognition in our communication to decide who we should trust and who might actually be lying to us. We use pattern recognition in music to anticipate the next chord that's going to be appealing to our ears. We even use pattern recognition to anticipate the actions of athletes in sports. From cooking Thanksgiving dinner all the way to making money trading, pattern recognition is ingrained into our daily lives. We just often don't acknowledge it. I began reading books on technical analysis back in 1988 or 89. Those books taught me to look for specific patterns or behaviors of price in order to anticipate which direction the market was heading in. The technical indicators that people use are designed to help them recognize patterns in price movement. As you can see, pattern recognition really is important. The best way to improve your pattern recognition skills is to practice. Take time to study recent price charts. Study how your favorite indicators reacted to changes in price movement or ongoing price trends. Even though I don't speak about it often, pattern recognition plays a huge role in helping me make money trading options as a retail trader. Remember, you don't have to anticipate every movement of the market. You just need to be consistently able to recognize one or two patterns and know how to use an option strategy to profit from them. That's it. Pattern recognition is trading. Pattern recognition is life. So that's it for the topic of the week. Let's go ahead and get into the review of last week's trades. We're going to start off with our covered call on Riot Labs Inc, symbol R as in Romeo, I as in India, O as in Oscar, T as in Tango. At the time, the stock was trading for $12.31 per share. I looked at buying stock and selling the December 12 half call at $1.56, hoping for a return of 14.22% in 4 weeks. Well, shares of Riot Labs grew 34 cents, ending the week at $12.65 per share. The call option that we sold gained 7 cents, leaving us with a net gain of 27 cents on the week if we were to close out the trade immediately. Now, with the stock price above our call strike, we are pushing towards our maximum profit of 14% on this trade. There's still 3 weeks left until expiration, so you'll definitely want to track the stock price and have a plan on how to defend this trade if price moves against you. This trade has worked out this week, so no adjustments are needed at the moment. And of course, if you happen to ever have a covered call on and the stock price is above the option strike price, there's always a possibility that that call option gets assigned, meaning you have to deliver the shares of stock. If that happens, you actually will go ahead and fully lock up your total amount of profit because the option will disappear and your shares will disappear at the value of the strike price. So it's a perfect scenario when that happens. I love that. If you get assigned on a covered call position that is in the money, you're actually going to go ahead and make your full expected return right then and there. So with 3 weeks left, that's also something we could hope will happen. So that's it. Let's get into the credit spread from last week, which was on Barrick Gold Corporation. Symbol G as in golf, O as in Oscar, L as in Lima, D as in Delta. At the time, the stock was trading for $18.24 per share. I looked at selling the December 18, 17.5 put spread at 17 cents. That could give us a maximum possible loss of 33 cents per spread. Well, shares of Barrick Gold fell 74 cents, ending the week at $17.50 per share. The out-of-the-money put spread that we sold is now in the money, which means that we are losing money on this trade at the moment. We still have 3 weeks until expiration, so you don't have to make an immediate adjustment. You can look to sell a higher strike call spread and turn this into an iron condor. The only problem with that is that you're not getting a whole lot of value for those upper strike call spreads at the moment, so I'm not going to rush to go ahead and sell that call option to sell the call spread, take in 11 cents and almost guarantee a loss, right? Because you end up lowering the profit range when you sell an iron condor to just the difference between your short strikes. The other option you can do is you can roll the strikes of the spread lower. Now, I would like to wait a few days just to see if the stock is going to show signs of pushing higher in price or if it's going to remain below our strikes. It's important to have a plan always and just be ready to execute if the stock doesn't show any signs that it's going to go higher. But the best thing that can happen is that the stock goes up another 50 cents and we don't have to worry about it, actually 51 cents, and stays above $18 per share. Our goal is simply for this thing to expire worthless, which means that it needs to expire with stock above $18 per share. And then our final trade from last week was a debit spread on Macy's, symbol M as in Mike. At the time, the stock was trading for $16.29 per share. I looked at buying the December 15.5, 16 call spread for 30 cents. That could give us a maximum gain of 20 cents, or that's a 66.67% return in 4 weeks. Well, shares of Macy's lost 1 cent, ending the week at $16.28 per share. The in-the-money call spread that we bought is still in the money, and we want this stock to remain above $16 per share for the next 3 weeks so that we can earn our initial expected return of 66%. So far, this trade is looking good as well, so no adjustments are needed. Just keep track of the stock. You've got an open position, even if it looks like it's making money right now, or if it looks like it's losing money right now. All that matters on all of these trades is where the stock is at expiration and what that means for your position. So always keep track of stock. Make sure you have a plan for whether the stock moves against you or stays where it is, stays above and is making you money. So be ready. The beauty of it is if you stay ready, you don't have to get ready. So have a plan in place even before you put the trade on, and then go forward fully knowing what all the possibilities are, and hopefully you'll make some money. So that's it for the trade review for last week's trades. Of course, now we are 3 weeks away from the December expiration on December the 20th. All trades on today's show will use that expiration date for monthly options in December. Let's go ahead and get into the 3 new trades for this upcoming week that I'm looking at. First off, we'll start with the covered call. I'm looking at the Advisor Shares Trust Pure U.S. Cannabis ETF, symbol M as in Mike, S as in Sierra, O as in Oscar, S as in Sierra. The stock ended the week at $4.52 per share. I'm looking at buying that stock and selling the December 5 call at 15 cents, hoping for a return of 13.94%, really 14% in 3 weeks. Now you enter this trade by buying stock for $4.52 per share and selling the December 5 call at 15 cents. This trade makes the most money if stock prices finish above $5 per share. The break-even price on this trade is $4.37 per share, and in real terms, that stock purchase will require $452, and you'll collect $15 for selling the option. And as a side note, I've had some people ask me why I typically am using penny stocks for the covered calls. Penny stocks are any stocks that are priced below $5 per share. $5 and under, I think, is how it's defined. The reason why is because for those of you who don't have a lot of money to trade options, this is a perfect example where if you've got $452, you could buy 100 shares of stock, and then you sell one option, take in $15, you might end up actually having a pretty nice profit by the end of 3 weeks. So you don't have to have a bazillion dollars to trade options, but you do have to get started somewhere. And then the next two trades that I mentioned require even less capital. So let's go ahead and look at those. The credit spread I'm looking at for the week is on Bank of America, symbol B as in Bravo, A as in Alpha, C as in Charlie. The stock ended the week at $47.52 per share. I'm looking at selling the December 47 put spread at 19 cents. That could give us a maximum possible loss of 31 cents per spread. Now you enter this trade by selling the December 47.5 put at 94 cents and concurrently buying the December 47 put for 75 cents. This is a credit spread because we're selling the spread, and this trade makes the most money if stock prices expire above $47.50 per share. The break-even price on this trade is $47.31 per share, and in real terms, you'll collect $19 per spread that you sell and have $31 at risk. Final trade on the week is going to be a debit spread on American Airlines, symbol A as in Alpha, A as in Alpha, L as in Lima. The stock ended the week at $14.52 per share. I'm looking at buying the December 14.5 call spread for 31 cents. That could give me a maximum gain of 19 cents, or that would be a 61.29% return in just 3 weeks. Now you enter this trade by buying the December 14 call for 91 cents and concurrently selling the December 14 half call at 60 cents. This is a debit spread because we're buying the spread, and this trade makes the most money if stock prices expire above $14.50 per share. The break-even price on this trade is $14.31 per share. In real terms, you'll pay $31 to enter the spread, and your maximum gain is $19 per spread. So that's it for this week's show. Thank you guys for listening. Thanks again for putting up with my hoarse voice on episode 350. My voice is about 90% back this time of the week today. So happy to make the show. Happy that you guys listen. Thanks also for the emails that I've received. Hope you had a wonderful holiday if you're here in the U.S. and celebrated Thanksgiving. And as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer: there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.